So how do we know which is the best supply or demand zone to trade from? Well, that's exactly what I'm going to share with you in this video today. I'm going to go through the 3 steps that I personally use before looking to use that area of supply or demand to take a trade. So make sure you watch this video all the way through to the end, and in the second half of this video we'll start going through some examples on the live chart as well. So the first thing, the first thing I'm looking for when we're looking to actually use an area of supply and demand zone, I want to see momentum. So what I'm talking about, if we have a series of cluster of candles, let's say we have some up down candles, and then all of a sudden we see a nice momentum move to the upside. What that shows me is that right here we had an accumulation of orders, and then the banks pushed that market to the upside. This momentum move to the upside, we want to see a continuation of that move to the upside. Once we see that momentum move, this will show you the best area to start looking to trade from. Now this is easy for you to identify on the chart. Just go back once you've gone through this video and look through your charts, and you will easily identify these momentum moves in the markets. Now, not every one is one we're going to look to trade from. So keep watching to see what other 2 things I will apply to make sure it's the best zone to use. But this is the easiest way to identify if it's going to be a good zone. The same if we see the market starting to chop up and down, and then all of a sudden we have a momentum move to downside, and we see continuation of that move. Very often you'll see a pullback and another continuation. So this is an area of supply which you want to be looking for potential sell off. But again, there are 2 other steps I will use before just taking a trade here. So that's the step we'll look for first. We'll look for that momentum move in the market. So step number 1 is M. Okay, remember M for momentum. Step number 2 is going to be we're looking for an area of imbalance to be formed. Now the imbalance, we want to see the imbalance forming on that momentum move. So what we're looking for here, we'll look for the area of imbalance to form within this momentum candle. Very often you're going to find there's an area where wick is pushed up, which you'll see later in the second half of this video what the imbalance will look like. There's also the imbalance trading strategy within the channel to teach you much more on imbalances. So this is step number 2. We're looking for that momentum move up to leave an area of imbalance. Now, why is this important? We want to see the market come back to fill this area of imbalance, then drop into your area of demand or up into the area of supply to look to take that trade. This will give you a much higher probability that this trade will work in your favor. As soon as we see the fill of that imbalance and it comes into your area of supply or area of demand, you're likely to see a strong move back in the same direction. So all those orders are coming back up, are filled inside the imbalance, it then tags the area of supply, and we see the drop away. So this is step number 2. So the step number 1 is the momentum move. The step number 2 is to look for the area of imbalance from that move away. So you can class this as step number 2 as I. So we have step number 1 is M for momentum in the market. Step number 2 is I for imbalance zone in the market. Now the final step, we're going to use 2 time frames. So let's say we're on a 4-hour time frame here. So if we're on a 4-hour time frame, we're seeing these moves on a 4-hour time frame, you want to look at the next time frame up being a daily time frame. We now need to see the daily. If we have this area of demand on a 4-hour time frame, we want to see on the daily time frame a bigger area of demand where we're inside. So this is where we come into understanding we have a 4-hour zone nested inside the daily zone. Now there is more on this in videos in this channel. I'll leave one of those linked above now if you wish to watch that after this video. But understanding the nesting of these zones will help you to identify the highest probability zones to trade from. So they are the 3 steps. Step number 1 is the M. We're looking for momentum in the market. Step number 2 is I. We're looking for imbalance. And step number 3, we're looking for the next time frame above, which we're going to class as A, above. So MIA. Remember MIA, and you will understand the 3 steps I use: momentum, imbalance, above. So time frame above. Remember, that is the crucial part to these 3 steps. If this doesn't line up, I'm not interested in that trade. I want to see all 3 line up for an entry. So this is what we're looking for. Let's go over to some live charts on this Euro-USD pair. And we'll drop down to a 4-hour using it as an example we went through. We'll use where current price is now. And we want to look for that momentum drop in the market. So let's look at this area here in the market. We have a nice push down, but this is not the area we're looking for. What we want to see is our consolidation, our area of potential supply where the market is accumulating those orders. We can see that happening right here in the market. Then we want to see that momentum move. Remember M for momentum, and there is your momentum move. This candlestick right there is your momentum drop to downside. That is where we see the start of the sell in this area. So we've created this area of consolidation. This is where the orders are accumulating, and I can guarantee inside this area we will see what I call a manipulation inside here. And there's a manipulation of this previous high, and then we see the drop away. So that's step number 1. We've identified that drop of momentum in the market. We can see the continuation to the downside after that bearish candle. Now the next step we look for is imbalance. So the imbalance is drawn from the low of this wick to the high of this wick. So we just mark this out. This is how I draw my area of imbalance. Now what we're looking for is price to come back, and it will want to come back to fill this imbalance, and it fills it on this bullish candle. So what about drawing an area of supply on this occasion? We're going to use these last 3 bullish candles. That would be my area of supply I would draw. You can see price comes back into the supply once we fill this area of imbalance. So we have that manipulation. Now the manipulation is something completely different. And there is a video already in the channel that goes through understanding manipulations in the market. Now, if you want to learn more on manipulations, I suggest watching the video which comes up at the end of this video. Now, obviously, if you want to learn more on the basics of supply and demand and understand candlesticks and trend analysis, I do suggest checking out the link below in the description of this video. It goes through for you to get the absolutely free online workshop. Now, that's totally free for you to grab today, so make sure you get that once you've watched this video. So that is step number 2. We now have the imbalance in the market. So step number 3, we mark off this area here. We now need to see an area here of supply nested inside the daily area of supply. So let's go to the daily time frame, and let's look at the daily area. What do we have? We have what we call a drop-based drop area of supply. So step number 3, remember A for above. This is our area of supply we can use on this candlestick here, this indecision candlestick, or even this candle as well. And we can see the market actually has a nice momentum drop away, leaves its own area of imbalance, and the market pulls back up. So yes, this is valid for that 4-hour entry. Now again, we do have a nice looking area of supply above with a momentum move down, and we have an area of imbalance left over on this candlestick. So we could even have seen price push back up into this area. But if we were taking a trade on a 4-hour time frame, this would have been valid. Using those 3 steps. Remember, we used step number 1 showing us the momentum move in the market. There wasn't really a momentum move here on the 4-hour time frame, but there was here. Then we went for step number 2. We're looking for that imbalance. We have this area of imbalance on the 4-hour, and we have an imbalance in the same place on that daily time frame. And the final step, to find those best zones, we look at the time frame above, and we want to see an area of supply on the daily, so the 4-hour is nested inside a daily time frame. And that's exactly what we have. So we can identify here that we have the area of 4-hour supply below nested inside this daily area of supply. Now, whether you use this candle for your area of supply or you use the actual whole zone, just remove this 4-hour zone, whether you use this whole zone here for your supply, it does not matter, as long as you understand it's nested inside that zone. So popping back to that 4-hour time frame, that same area, we can identify the market does come back in and we have a nice drop away, a nice push all the way out back to take these lows. Now, something else we can also witness here at the same time, understanding that these equal highs in the market, well, not exactly equal, but it's an area where we're going to see money sitting above where the market wants to go to take that money. It's going to take those highs, push in to fill that imbalance, and then we can look for those trades. But this video is all about understanding the best zones for you to look to trade from. And this is the exact same steps I use when looking for those zones. So what about when it doesn't line up? Well, let's now go back and have a look again at another area on the chart. And we'll use this example. This looks like a good example. So we can see we have a nice momentum drop to downside here. Now we have this area of supply, which is fantastic. Okay, so we have a nice momentum drop out. We also leave behind this area here of imbalance. So step number 2. So step number 1, there's a momentum move. Step number 2, there's our imbalance zone. But look, price doesn't really continue through. We have a pullback. So again, we have the same thing. We can see this area of supply. Price does tag it. We also have this nice area here of imbalance, which gets filled. So now we have these two zones. Okay, so we have this momentum move away, which actually looks stronger than this first one. But what's the third step? Remember, the third step is we need to make sure this area of 4-hour supply is nested inside a daily zone. So let's go to the daily time frame. And we can identify here that the second zone, which we marked here, is not in fact inside or nested on a daily zone, but this higher zone is. So we would not be able to take this trade based on that information. Yes, it did fall away. And we did also have these equal highs manipulated and to downside. Again, that's a completely different strategy. This is just to teach you, using these 3 steps that I've shared in this video today, how you can start finding those higher probability zones to only trade from. So I hope this video is going to help you to find those zones, to find better trades for yourself. Now, if this video is giving you some great value today, make sure to give me that thumbs up, because it helps me to know that you're enjoying this type of content. And don't forget that popping up right now is that video I suggested go through and watch next, understanding the manipulations in the markets. And if you want to get that free online workshop, don't forget the links below in the description of this video.